Hello friends, welcome to the channel. In the previous video, I have put MCQ questions on investment management part 1. Today we are going to discuss MCQ questions on investment management part 2. Please subscribe the channel. Subscription is free. First question, financial disclosure regulations affecting the brokerage industry are a type of dash dash dash. A. Market risk, B. Financial risk, C. Business risk, D. Liquidity risk. The correct answer is C. Business risk. Question number 2. If interest rates rose, you would expect dash 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 to also rise. A. Business risk, B. Financial risk, C. Liquidity risk, D. Inflation risk. The correct answer is C. Liquidity risk. Question number 3. In order to determine the compound growth rate of an investment over some period, an investor would calculate the dash dash dash. A. Arithmetic mean, B. Geometric mean, C. Calculus mean, D. Arithmetic median. The correct answer is A. Arithmetic mean. Question number 4. Portfolio weights are found by A. Dividing the standard deviation by expected value, B. Calculating the percentage each asset is to the total portfolio value, C. Calculating the return of each asset to total portfolio return, D. Dividing expected value by the standard deviation. The correct answer is B. Calculating the percentage each asset is to the total portfolio value. Question number 5. Which of the following is true regarding the expected return of a portfolio? A. It is a weighted average only for stock portfolios. B. It can only be positive. C. It can never be above the highest individual return. D. All the above. The correct answer is C. It can never be above the highest individual returns. Question number 6. The relevant risk for a well-diversified portfolio is A. Interest rate risk, B. Inflation risk, C. Business risk, D. Market risk. The correct answer is D. Market risk. Question number 7. Portfolio risk is best measured by the dash dash dash. A. Expected value, B. Portfolio beta, C. Weighted average of individual risk, D. Standard deviation. The correct answer is C. Weighted average of individual risk. Question number 8. Owning two securities instead of one will not reduce the risk taken by an investor if the two securities are dash dash dash. A. Perfectly positively correlated with each other, B. Perfectly independent of each other, C. Perfectly negatively correlated with each other, D. Of the sum category, for example, blue chips. The correct answer is C. Perfectly negatively correlated with each other. Question number 9. Portfolios lying on the upper right portion of the efficient frontier are likely to be chosen by dash dash dash. A. Aggressive investors, B. Conservative investors, C. Risk-averse investors, D. Defensive investors. The correct answer is B. Conservative investors. Question number 10. The last step in fundamental analysis is A. Economic analysis, B. Industry analysis, C. Company analysis, D. Technical analysis. The correct answer is D. Technical analysis. Question number 11. A portfolio which lies below the efficient frontier is described as A. Optimal, B. Unattainable, C. Dominant, D. Dominated. The correct option is A. Optimal. Question number 12. The optimal portfolio is the efficient portfolio with the dash dash dash. A. Lowest risk, B. Highest risk, C. Highest utility, D. Least investment. The correct answer is C. Highest utility. Question number 13. Market risk is best measured by the dash dash dash. A. Alpha, B. Beta, C. Standard deviation, D. Coefficient of variation. The correct answer is D. Coefficient of variation. Question number 14. Non-systematic risk is also known as dash dash dash. A. Non-diversifiable risk, B. Market risk, C. Random risk, D. Company specific risk. The correct answer is A. Non-diversifiable risk. Non-systematic risk is also known as non-diversifiable risk. Question number 15. Under the PE model, stock price is product of dash dash dash. A. EPS and DPS. EPS means earning per share, DPS means dividend per share. B. PE ratio and EPS. PE ratio means price earning ratio, EPS earning per share. C. EPS and required return, D. PE ratio and required return. The correct answer is B. PE ratio and EPS. Under the price earning model, stock price is a product of PE ratio and EPS. Question number 16. The central issue of efficient markets concern dash dash dash. A. Regulations, B. Information, C. Participants, D. Structure. The correct answer is A. Regulations. Question number 17. If a market is inefficient, a new information is received about a security dash dash dash. Nothing will happen. A. Nothing will happen. B. The stock price will fall at the first and then later rise. C. There will be a lag in the adjustment of the stock price. D. There will be negative demand for the stock. The correct answer is A. Nothing will happen. If a market is inefficient, a new information is received about a security, nothing will happen. Question number 18. The highest level of market efficiency is dash dash dash. A. Weak form of efficiency, B. Semi-strong form of efficiency, C. Random walk efficiency, D. Strong form of efficiency. The correct answer is strong form of efficiency. The highest level of market efficiency is strong form of efficiency. Question number 19. The random walk hypothesis is most related to A. Weak form EMH, B. Semi-strong form EMH, C. Semi-weak form EMH, D. Strong form EMH. EMH means efficient market hypothesis. The correct answer is B. Semi-strong form EMH. The random walk hypothesis is most related to semi-strong form of EMH, efficient market hypothesis. Question number 20, last question. Security returns by examining various techniques applied to a set of data. This is known as dash dash dash. A. Fundamental analysis, B. Technical analysis, C. Data mining, D. Random walk theory. The correct answer is B. Technical analysis. Thank you. Please subscribe the channel. Subscription is free. For more videos, you can go to Ashok Commerce Tutorials. Thank you.